Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst for the last 13 years. In this video, we're going to check in on the broader market and the CPI reaction. All in all, a non-event, but there's a key tightening range that's likely to break within the next couple of days that's going to dictate short-term direction. Cannabis space continues the volatility, though it starts to shrink off a little bit. And we're going to check in on the uranium space, which is starting to feel a little FOMO-y.
So overall, CPI reading came in 0.1% higher than expectations. Overall, a non-event. But if you said that CPI was going to come in higher than expectations and we would have a green day in the NASDAQ and the S&P 500, a lot of people would say, no, we won't. But overall, it's going to be the break of this tightening daily range that dictates, for me, the end or the second half of this month. And so again, it's just patiently waiting for the break, the bulls to confirm a daily higher low. On SPY, we have to break the high of today tomorrow, which would be an hourly uptrend confirming, and the same thing for the NASDAQ. So the most important support remains 442.75, and now the most important resistance will be 448.77. Essentially, it's possible to, break that level and then eventually roll over, but if we keep these daily higher lows going, the bulls don't have anything to worry about. And so tomorrow, the bulls are going to try and shape up the low of today as our new higher low, and we'll see if they're able to do so. NASDAQ, same deal. If the bulls hold the low of today, break the high of today, that's the hourly uptrend confirming. That's the daily higher low being set. Burden remains on bears. We've been in a daily uptrend for almost a month at this point, 3 weeks. And so as long as that remains the case, the bulls are in control. The bears have to change the trend. And they do that by breaking the low of last Thursday. So we'll see if they can show up tomorrow. And I'm going to be watching the financial sector closely because it had a daily inside bar. And if that daily inside bar were to break bear, that would be a key break of resistance straight into consolidation, which, as we know, is never what the bulls want to see. So watching that daily inside bar. So cannabis sector, as anticipated, we're going to see volume continue to drop off. That's the way these patterns go. We're going to eventually find a daily higher low, and then we're going to trade within that range for a while as volume continues to drop off. So for CGC, we had the gap down, and still the volatility is wild. Gap down open into a 10% bounce into a big quick. So 10% in 5 minutes into a 20% drop in 20 minutes, 25 minutes. That's wild volatility. We got close to hourly oversold conditions. We didn't quite get there. And then we started the bounce and was talking about this 5-minute inverse head and shoulders that saw a bounce follow through. And then the bears defended the high of day resistance. So the bears played defense and they rejected the price. So what I'm looking at now is a tightening hourly range for tomorrow. So we either hold 104 and break 137 to confirm an hourly uptrend and to confirm the daily higher low is set, or we fail 137 and break 104 and keep daily consolidation going. And with where we close, the bears definitely still have some favor. Just want to make a quick point. This sector absolutely trades correlated to the broader market on short-term time frames. If you look at CGC today on the 5-minute, low of the day is 1020, and then we go straight up for 20 minutes. Look at ACB, low of the day, 1025 or so, and a bounce. MSOS, low of the day, 1020, straight up for 20 minutes. Why were they all doing that? What did the NASDAQ do? Low of the day, 1015, straight up, and a new high of the day. So if you're watching on the 5-minute time frame, and I'm watching the NASDAQ on one screen, and I'm watching CGC and MSOS on the other screen, without a doubt, there's correlation there. And as the volume continues to drop off, that correlation is going to matter more and more, in my opinion. So you could be keeping an eye on it if you're short-term trading. You absolutely should be. If you're not, then who cares? So CGC, tightening range, ACB daily consolidation underway as well. Again, a daily higher low is the most likely scenario, but because we have retraced so significantly, 60% retracement of the move, when we set a higher low, we then scout a lower high, and we scout a tightening range. So resistance on ACB, 885. Support is down at 727, If we break 727, the hourly downtrend continues, and we look to hourly oversold conditions. Essentially, if CGC and ACB break the low of today tomorrow, we look for hourly oversold conditions to lead to a bounce, but we do not set daily higher lows until we confirm an hourly uptrend with a higher low and a higher high. So the hourly downtrend is now our guide for daily consolidation. Again, anticipating the daily higher low within a day or two, but no sign of it just yet. Cron, laggard bull on the Canadian side, and a slow and steady move up, which is certainly not what we've been seeing in this sector, but volume still way lower than peers, 20 million volume roughly, but we did see new highs, and that is making it stand out a bit. 256 extended hours resistance. There's a lot of resistance at 261 and 262. How do I see that? Well, I go back and look, where did the price struggle in the past? Look at all these tops back from the start of the year, and we pulled back just under those tops today. If I'm a bear, I want the price to be extended, running into resistance. I short off the resistance, and then we look for the pullback. We'll see if the bears follow through tomorrow. MSOS is holding well. Daily inside bar, we didn't break the low of yesterday. That was a nice win. Sold some position from the end of the day buy yesterday at 865. And now we're looking at, is this a 4-hour head and shoulders? And essentially, it's a battle between 8 and 9. We've rejected from 9 a bunch of times. We've held 8 a bunch of times. And so if we drop down and break $8, that's going to make the daily bull flag a little bit less likely and will tell us further consolidation is coming. So we can see the support the last 2 days, 813, 808. The low of last Friday was 798. So bulls are defending support. And the high of today was $9 on the dot. The bears are defending low $9 resistance. Curious to see how much money that the ETF has left. They spent a third of their cash yesterday. Probably spent some more of it today. And bears want to see MSOS without cash, knowing that they won't have cash to buy the underlying positions. So as of right now, the consolidation on the daily time frame, and this is the way that markets go. You run up harder. So CGC and ACB dumped harder in the bear market. They ran up harder in the news, and they're pulling back way harder on this pullback. You look at the retracement side, ACB 60%. If MSOS were giving back 60% of this move, right now we'd be trading at 650. That's what it would look like. And so it's very different. They're two different animals with how they're trading. TLRY confirmed a daily downtrend today. Granted, it was confirmed with no follow through, but this is a lower high and lower low. So a confirmed downtrend with no follow through means zoom out and look for a potential bull flag, but I need to see these bulls get over $3 tomorrow to be calling this a bear break with zero follow through. And the thing about TLRY is, look at the day of the news. The day the news was announced, the high was 291. Today we fell back within the range of the day the news was announced. If MSOS was doing that same thing, we would be trading in the low $6 right now. If CGC were doing the same thing, we'd be trading, we'd be trading at 40-something cents. So what that shows me is TLRY hasn't really responded much to this news at all. I mean, you go back. Anyways, you get the idea. Tesla, daily inside bar. So I attempted to take a bit of a hedge from my swing position today, got stopped out when the bulls showed up. I thought we were going to see daily consolidation begin after the week closed yesterday, but bulls did a good job of showing up. We had a 15-minute equilibrium. I got this 15-minute lower high short. Took a little profit, stopped out of a runner. But all in all, it's a daily inside bar. And we're looking for, if the inside bar breaks bear, we scout a daily high or low. But again, whenever I'm looking at any individual name setup, it's always in the context of, is SPY and QQQ, are they going to break the daily tightening range bull or bear? If they're going to break bull, Tesla bulls are positioned well. If they're going to break bear, Meta and Microsoft are potential rising wedges to set weekly lower highs. Netflix had some news today and just absolutely dumped. Big drop on Netflix. Still watching Netflix for a 3-month long-term lower high. Again, anything that looks like this, I'm watching for an equilibrium. Semiconductors got a wall of resistance on SMH just over 152. So we've been battling that level the last 4 days. NVDA, anything under 466 is just a daily lower high. But I'm not going to forget that NVDA is in a weekly uptrend. So again, if SPY and QQQ break this sideways daily range bull, NVDA is going to be shaping up a weekly higher low. So keeping an eye on that. Just looking for direction from the broader market to know which direction to have bias in, and then find the individual names that favor that bias, favor that direction. Healthcare still crawling higher, but not really a factor right now in the broader market, in my opinion. Close of the last 3 days, very similar. ARKK, still watching for a weekly lower high here, certainly the most likely scenario. And we had a bull break with zero follow through. Here's another rising wedge. Take off extended hours to just smooth it out a little bit, make it a bit more clear. Uptrending resistance line, rejecting the price. Uptrending support line, breaking bear, which is why I'm watching Meta and Microsoft for the same thing. Is a 4-hour rising wedge going to shape up a weekly lower high? And ARKK needs to break 42.97 for that weekly lower high to officially be set. But we're definitely watching for it. And so we can say that the ARK bears are positioned well if the NASDAQ breaks a tightening range bearish, because ARKK, pretty solid red day today, even though QQQ is green. Uranium names are getting some buzz. We've been talking about the uranium sector for a long time, and it was CCJ's monthly equilibrium. Remember, we kept talking about it. We're tightening up. Watch the break. I made a specific long-term patterns video, and it was highlighted there. We break 29.73, and here we are up almost 30%. It's just been straight up since that bull break took place. And the daily chart getting extended here. Weekly chart getting a bit extended, but the bulls do still have full control. And you go to the ETF, URA, and we could say, all right, URA is hitting the highest level that we've seen in a year and a half almost. And there's a ton of other names as well. And so now people are starting to pay attention. I'm getting more questions. It's the way markets go. So I'm getting more questions about CCJ in this week. I'm getting more questions about looking for an entry than at any time during this 4-month run-up. And so why are you looking for an entry now? Well, because it's been going up so much and you're feeling the FOMO. So you've got to remember that aspect of the game. But at this point, if I don't have an entry, at a bare minimum, I'm looking for daily consolidation to try and look for a higher low. And if I'm more patient, I'm looking for a weekly pullback for a higher low. But keeping an eye on the uranium sector, it's the strongest. I mean, how many times have I said CCJ is the strongest name that I'm following in markets because it's in a monthly, weekly, daily uptrend. It's at 16+ year highs. It's just not, the exciting 10% kind of day. A big day is, solid day is 3%. And so it requires more patience. But this is exactly the kind of name that I want to hold in an IRA where, it doesn't have too much crazy volatility, but I don't really need to check on it much. The dollar, still a potential daily bull flag, battling. And gold, still weaker. Silver, still weaker, trying for weekly higher lows, no sign of it. Again, these names are swimming against the current of the dollar. And unless the dollar current changes, they're not going to follow through bullish. Oil, keeping an eye out for a potential 4-hour rising wedge that stood out this morning. And if this breaks, we'll zoom out and look for daily consolidation. I might make an attempt. If we bounce, I may make an attempt shorting this. Essentially, why would I want to short it on a bounce? Because that puts my stop loss closer nearby, and that makes the risk smaller, so the risk-reward profile of the trade is more favorable. And my target would be ideally weekly consolidation, but we'll see. I'd like to see, we'll see where we're shaped up in the morning. Natural gas, bulls followed through yesterday, but today inside bar, again, we got to watch for the possibility that we're shaping up a 2-day lower high and tightening range. And if the bears confirm a 4-hour downtrend, well, 4 hours choppy. I don't like the clarity there. We're going to stick with the daily. If this inside bar breaks bearish, our 2-day lower high is set, and we'll look to continue to tighten up from there. Let's see what else. Didn't talk about VFS yesterday. We did start the daily bounce, but I stopped out break even. I don't like the liquidity on this name. The bid and the ask spread on the morning is often 2%. That's way too large for me. But stopped out break even yesterday on that play. Took a top fishing attempt on TLRY today. Stopped out for a penny loss. Not a very eventful day for me. More observation, but just patiently waiting for the break in the S&P 500 and the NASDAQ. I hope you're well. Do good things.